Welcome back to Street Smart. The latest batch of economic data out today reaffirms the recovery in the housing market is slowing. If you believe there is a recovery, we're going to talk to our next guest. He says it's non-existent. Construction of new homes in April fell 11% from the previous month, and building permits, a sign of future construction, tumbled as well. Joining me now to talk about the overall housing industry from a stock perspective is Bob Wetenhall. He's an analyst for RBC Capital. Welcome to Street Smart, Bob. Thanks for joining us.
Thanks a lot, Matt.
So non-existent. You think no recovery. I mean, I was thinking we had the horrible weather story here. Maybe we bounce back from this low number after that.
Really pessimistic on the entire sector. The spring selling season is the key piece of the year where you need to see accelerating volumes for there to be a recovery in the home builder space. And you can look at today's print of 523,000. It's a really poor print.
So we don't come back anytime soon in your mind here. And I mean, this is what you do. You're a housing analyst. You must want us to come back as soon as possible.
Hey, we think the word recovery is a bit strong even at this stage in the cycle. We're looking for a gradual improvement, and whatever type of recovery we can envision is now clearly pushed back into 2012. We don't think there's a lot of serious debate around that at this juncture.
So none of the stocks in the sector you like? I mean, I know if you said earlier, if I put a gun to your head and say you must buy a stock in the housing sector, maybe there's a couple, but...
If we're looking for good risk-adjusted returns, our best idea remains Lennar. And the fact of the matter is they're profitable. And the majority of home builders are unprofitable or operating at break-even levels. So we like Lennar, terrific management team, and they're actually capitalizing on the difficult operating environment by buying distressed properties at very low valuations. We think they've got a great position in a number of assets that they've purchased at 30 cents on the dollar. So we like that strategy. We think it's appropriate for what's going on. They're not betting the ranch on a recovery in the housing market for them to remain profitable.
What about KB Homes?
KB Homes is a great story. Jeff Kaminski is a new CFO who was hired by Jeff Mesker, who's one of the godfathers in the industry. What we like about the KB story is they're proactively trying to address the cost structure. They recognize and acknowledge the fact that volume trends are suppressed due to a bad economic backdrop and a huge glut of inventory due to foreclosures. So they're responding by taking out costs. We think they're going to take out $50 million in SG&A. We don't see the company being profitable this year, but we expect that to turn profitable in 2012.
What can they do at this point? It's hard for me to imagine any company doing serious cost cutting now, because they should have been doing that over the past 2 years, right? I mean, what's left to cut at these companies?
You're definitely gone through the fat. Now you're into muscle and bone. But nonetheless, we think it's the appropriate response in an adverse operating environment. If you're just trying to wait for the recovery, you could be holding your breath for a long time.
And the land buying story, is that over? I mean, for a while, we were hearing Bob Toll and those guys saying now's the time to get cheap land. Obviously, if you're not betting on a recovery, it must be still going cheap, right?
Toll's got one of the best asset bases in the entire sector. We love their land position. They're operating in the core Boston to Washington, D.C. corridor. That land asset value they have will reinflate when the recovery occurs. The only issue is that's looking 3 to 5 years out before any real recovery happens. So you could see gradual improvement. We love the management team. They have a good strategy. You have to be a very long-term patient investor. We don't see a near-term catalyst to drive value in the stock.
There's nothing that can happen, your opinion, in the near term that could drive growth in the entire industry.
3 factors. 1, tighter lending standards by the bank is the primary problem. 2, huge competition from foreclosed inventory trading at lower prices relative to new homes. And 3rd, the economy is gradually improving from a very low base, but we're still contending with very high levels of unemployment and low consumer confidence. Those 2 factors need to improve before the housing market's going to dramatically recover.
Got it. All right, Bob, that's pretty depressing stuff, but hopefully some other industry will pick up and kind of make up for that. Bob Wetenhall there from RBC Capital.